Most traders believe they need a better strategy, but the truth is, your results have nothing to do with the strategy you use. They depend entirely on which level of trader evolution you're stuck in. Today, I'm going to break down the 4 levels of trader development and why almost everybody dies on level 2. Level 1 is where almost all of us start. You believe indicators create consistency, so you collect them. RSI, MACD, Bollinger Bands, VWAP, ATR bands. You stack them like armor, hoping one of them protects you from losses. But here's the psychological trap. Every time you add an indicator, your brain feels safer, but the market isn't getting easier. Your illusion of control is getting stronger. Like for example traders who wait for 5 indicators to align, but the alignment only appears when the move is already 80% over. Level 1 feels productive, but it teaches you to outsource decision making to tools instead of understanding the market itself. Level 2 is the most dangerous level because it feels like progress. You start collecting systems, breakout system, trend following system, Skype system, ICT concepts, wake-off, supply and demand, order blocks, support resistance, smart money, YouTube shortcuts or Reddit alpha leaks, whatever your trading guru of the week is selling. But here's the paradox. The more systems you learn, the worse your execution becomes. And why? Because you're switching systems based on emotions and not data. Red week must be the system. Choppy market must be the wrong setup. 3 losses in a row must be a better strategy somewhere. This is called novelty bias. Your dopamine spikes when you switch systems, so you feel like you're improving, when in reality, you're destroying any chance of consistency. At TRN, we teach level 2 traders something they've never seen before. Your strategy doesn't matter nearly as much as your ability to understand market context and execute with intent, not emotions. At level 3, everything changes. You stop asking which strategy works and start asking why does the market move at all? What level 3 traders do differently, they observe liquidity, not indicators. You begin seeing the market as a battlefield of positioning, where traders get trapped, where stop orders cluster, where institutions accumulate, and where liquidity pockets are created and consumed. Level 2 traders also wait for context before using tools. Instead of starting with dozens of indicators, they start with structure, volatility, timing, and liquidity. They also stop forcing trades. When nothing happens, level 3 traders don't search for trades. They wait for the market to reveal opportunities. Level 3 is also the first stage where a trader becomes really dangerous, because now you're trading the market, not reacting to it. Now I want to show you an example of how level 3 traders see the market for you to better understand how this looks like. Right here we are on the BTC 5-minute chart. And we are right before the US session starts. And what happens when the US session starts? The big players come in, which often leads to volatility, to big price moves, and we want to participate on this. So I will have a close look, especially on the first hour of the trading session, which is called the opening range, because afterwards, often we have clean levels we can work with and look where we can find an entry. Let's start. Okay, here comes the volatility, massive candles, and now it gets interesting. What happened right now? We took out this level right here, which is the current day low, which was the current day low, and right afterwards we pumped back above and closed above. This is a liquidity grab. What market did here is he grabbed the liquidity right below this low and then pushed in the other direction. So market makers grab the liquidity and now they want price go in the other direction. Easy, it's their exit liquidity. And this is also a great spot to look for a long entry in this case. Let's see. Yeah, now we confirmed a Morningstar pattern, a very strong candlestick pattern with a close above the previous candle, this pin bar with a long wick, which also led to the liquidity grab. And this is a strong long entry signal because this candle closed above this candle, and that's the confirmation for this pattern. So now I would like to enter a long trade and place the stop loss below the pattern. And now I'm thinking about a target, and for me it's clear that this is my target because this level and also the current New York high is already an area of liquidity, because many traders will have placed their stop loss right above here, and for sure market makers like to grab this liquidity to use it as an exit, and that's why market will probably go up there. That's my target. Let's see what happens. Okay, yeah, market reached the target right here, and this would have been a very well trade, honestly. And now the first hour of the trading session is over, so we formed the opening range with the high here, and right afterwards price reversed a bit. And now I want to see how price reacts between the opening range high and the opening range low to maybe find another entry. Let's see what happens next. We're ranging a bit inside the range. Everything fine, no clear signals. And then we have the breakout. The breakout above the range, and this time we closed above the range, above this level right here. And that's why it's in this case not a liquidity grab, it's a confirmed breakout. But as a third level trader, we know that a resistance that got taken out turns into a support. And we want to see a retest of this support before we think about a long entry, and a continuation of this uptrend we already started here inside the opening range. Let's see. So here comes the test of the support, and this green candle right here closed above the opening range high, which is the confirmation for the pullback. And yeah, we could enter another long here. Let's place it above this previous candle here. And then we have the previous day low as a nice target up here, because we know this is another area of liquidity where traders place their stop loss, and market makers will probably push the price up here. Let's see. No, not now, not now. Here it is. So this worked as well. You see this nice uptrend after the pullback, continued perfection. This is how third level traders see the market and analyze the market, and also find entries. And by the way, this indicator displaying the opening range and also nice levels you can use for stop placement and also for take profit placement is completely free for you. You just need to book a strategy call with our pro traders from our day trading academy. Also, the strategy call is completely free, and our pro traders will have a look where you're currently at regarding your trading, in which stage you are right now, and at the end of the strategy session you will have a clean perspective what you can do to get to the next level of trader evolution. So it's definitely worth it, and everything for free. And if you join the call, as I already said, you will get access to this indicator on top. The link is in the description below, so it's up to you. Now let's continue with the video. Let's move on to level 4 traders, the strategic executors. And level 4 traders aren't gods. They're not clever yet. They're not predicting the future. They simply execute the present. With discipline so boring, it looks like automation. Their market entries are identical every time. Zero hesitation, zero improvisation, and zero gut feeling. Their stop losses are placed with intent, not based on fear, but based on invalidation. They use tools only to confirm. They don't use indicators to decide. They use them to support the structure they already identified. Furthermore, they master one setup before adding more. Not 10, not 12, just one. This is why our indicators are built the way they are at TRN Trading. They don't replace thinking, they enhance your execution once you're operating in level 3 or level 4 mindset. If you want to evolve as a trader, here is your roadmap. From level 1 to level 2, stop chasing indicators, start understanding patterns. From level 2 to level 3, stop collecting systems, start studying the market itself. From level 3 to level 4, stop experimenting, master one execution model until it's boring for you. Honestly, most traders never make it to level 3, and almost nobody makes it to level 4. But if you stay focused, stay intentional, and stop looking for shortcuts, you'll get there faster than you think. Trade with intention, execute with precision. Welcome to level 4.